The basic structure of equities and futures dictate the differing data output. Equity data is based on a particular company and is more of a perpetual instrument. Futures are based on a particular underlying, maybe an index or a commodity, something along those lines. And from that base instrument, you've got various time-based classes are developed and will exist for only a fixed period. As a result, quotes and volumes for a specific future will exist for a block of time. The size of the market for futures much larger. Equities, because of corporate actions, they're gonna change, and some of those components of that, so price changes, things like that. Futures have implieds and special combinations, which makes it a little bit more complex. And another basic difference is equities is kind of fragmented across various markets, so you have to link those together and get the consolidated best bid offer, things like that. Whereas futures pretty much stay in their lane on a particular exchange.
Which data cleaning challenges are unique to U.S. equities?
Given the nature of futures, the way they're structured, and that there's no real changes in those, and based on that base product, those cleaning issues are minimal. Whereas with equities, cross different exchanges and different listings, and with the corporate actions, managing the reference data for those, it can be a challenge, and it's a pretty dynamic and arduous task, if you will. Futures, because of their implieds, sometimes the volumes are off a little bit. If you calculate the volumes on the CME and then go to their website, sometimes you'll have differing numbers just because of the way that people record those. So,
how do varying exchange protocols in the U.S. equity space affect the harmonization process?
Exchanges feel the need to provide different types of tickers across there. So Berkshire and Comcast are kind of the poster children for those varying differences. Order types kind of comes next. These are condition codes that attempt to codify the various order types among exchanges. But within those exchanges, there's going to be different types of things like that. And then there's just the general field matching for fields, as simple as side, price. And of course, there's other fields that some are populated, some aren't, like MIPID, Market Participant ID. Some exchanges provide them, some don't.
What complexity arises from futures data, such as rolling contracts and expiry?
The time series analysis is tricky. So if you want to take a look at a future over several years, you're stitching together different contracts over 3 months. So from a market data standpoint, stitching those together can be a pretty big challenge. And because of the holders of these futures need to roll these, analysis to access that lead contract, that comes into play as well, because a lot of times, when do I switch over to that new contract? Is it based on volume? Is it based on a particular day, like 5 days before that expiry?
How does order book depth and message frequency differ when normalizing equities and futures data?
Futures, particularly index, will generate a tremendous amount of records, because think about it, S&P 500, you're tracking 500 names, and then you've got several contracts across different months. Every time one of those names ticks, you're going to get a change in that underlying. So if we look at some of the specifics for that, for 1 day level 2 quotes, a CME file is about 500 million records. And that's very similar to the NASDAQ quote file, which is about 500 million. But if we look at S&P's minis in particular, they have about 12 million records. Apple, kind of our, again, another poster child for that, has 1.2 million records. So in order of magnitude, a contract will be that much larger, good amount of data, and because of that index change for each of the constituents.
How does BMLL address timestamp accuracy and latency across asset classes?
At BMLL, we source the data directly from the exchanges. We use the exchange matching engine timestamps down to the nanosecond when it's available. In the event that the exchange data is not as robust or complete as we need for a level 3 capture, which is every order on the book, we rely on various co-located third-party vendors for that type of data. So, maybe 95% of the time we'll source it from the exchange, but there are certain times when we rely on third-party vendors who are sitting right there in the exchange and literally doing a better job than the exchange capturing that data.
What challenges do you face when curating alternative or derived data?
We have two overnight processes that we run. The first one is we take that exchange data, and what we do is we normalize that and harmonize that, and we create what we call a Parquet file format. So what we do is we take that munge of data that we get from all exchanges, and we divvy that up into data sets, trades, quotes, market states. We have something that we call a CBBO. We have the NBBO, which is the national best bid offer in the US. So we create those separate data sets overnight. So it's much easier for people to access the data. Additionally, what we have is derived metrics. And think of those as like daily bars or enhanced analytics that include basics like spread, volume, volatility, but get much more sophisticated in our proprietary to BMLL, but nonetheless, we provide open access to how we calculate those. Those are things like probability of fill, time at CBBO, sweep to fill. So the challenges with these are depend on the exchange processing and delivering of the raw data. And we've had recent days where volumes have just doubled, tripled, even been tenfold. So you're going to have knock-on effects for that. So there's going to be delays from exchanges delivering that data, and then that causes delays in us making those.
How do cleaned data outputs influence the predictive analytics and backtesting capabilities?
Typically, currently, quants will spend, upwards to 80% of their time collecting, munging, fixing, cleaning, correcting data. And what we do at BMLL is we'll normalize that. We'll clean everything up. We'll make sure that corrections are updated so that a quant or an analyst, when they get our data sets, they're cleaned and they're normalized. That enables them to spend 80% of their time analyzing this data and creating these different metrics and taking a look at these back tests. So they have much more time to do the actual analysis, focus on these analytics, these back tests, and not have to deal with any of that cleaning and munging. So that's our big value add.
Who is using your futures data so far?
CTA firms that are working with futures, trading with futures, they're gonna look at our data. We also have buy side firms which are using futures on a hedging basis and even an exposure basis. So they're using those. We've got the different exchanges that will use that data to kind of benchmark themselves against other exchanges and things like that. So really, it runs that gamut. We've even got some regulatory bodies that are looking at our level 3 data, so they can see those types of layering and things like that to take a look at from a compliance and surveillance standpoint. They're going to take a look at those. So really, it runs the gamut.
What has changed since BMLL was acquired?
Super exciting, for me and for everyone. Basically, it's part BAU and part significant investment that enables us to grow. And what I mean by grow is to add more content, more exchanges, more asset classes. And next year, we're super excited for our extension into futures and to really focus on futures, options, derivatives products. Of late, we've been mostly equities, and we're almost cleaned up on a global offering for those. And 2026 is going to be our big year for futures and options. This investment enables us to provide that type of capital to create these products, to add personnel so that we can focus on these from a sales and product standpoint and really get up and running in the derivatives marketplace. As a matter of fact, we're going to have our futures available in a data feed format at the end of this year. And once we do that, we're going to start to expand out to other futures, Singapore, Hong Kong, Osaka, other futures markets like that. We've got Opera. We're going to continue to expand into other option marketplaces like that. So 2026 will kind of be the year of derivatives for us. And again, this investment helps us do that.